Hello, good morning everyone. You are listening to Kotak Securities weekly fundamental podcast. This is Rini Mehta. So last week Nifty gained 0.4% while Sensex was up around 0.6%. Both BSE Midcap and SmallCap Index underperformed. While Indian equity markets remained concerned about growth prospects, even as inflation continued its downward trajectory, markets turned hopeful ahead of the upcoming budget, while macro indicators continued to be weak. On the economy front, the trade deficit at 23.8 billion US dollars in December remained elevated, with exports declining 12% year on year and imports declining by 3.5% year on year. If we look at foreign flows at this time, FIIs continued to be net sellers to the tune of rupees 19,880 crores till date in Jan. FII flows are expected to remain volatile, and FPI flows till date in Jan were positive for emerging markets except for India and Indonesia. Philippines, South Korea, Taiwan and Thailand witnessed inflows. Now let's talk about some stock picks for the week. First, I'll give a result update on IndusInd Bank. IndusInd Bank had a stable performance overall. IndusInd Bank reported a solid 70% year-on-year earnings growth, led by 15% year-on-year operating profit growth and a 35% decline in provisions. Asset quality continued to show improvement, and the consequent decline in credit costs led to return on equities reaching 15%. The extension of tenor for the MD and the direction of the cost of funds remain near-term concerns. So right now we maintain add rating on the stock with a fair value or target of rupees 1,350. Lastly, our pick of the week is also from the banking space, and it is Federal Bank. Federal Bank is sailing through sector tailwinds. The bank reported 50% year-on-year earnings growth due to a 7% decline in provisions and 40% year-on-year operating profit growth. Loan growth was healthy at 20% year-on-year. Net interest margin expanded 20 basis points quarter-on-quarter, and asset quality metrics were steady. Return on equity, which is currently at a 9-year high at 16%, is partly driven by operating leverage and tailwinds from net interest margin expansion that would moderate from here on. We have a buy rating on the stock currently with fair value or target of rupees 160. So guys, that's all for today. See you again next week. Thank you and signing off.